Hello, everyone. My name is Gregory Harnett, and I'm sorry for the last minute reporting on this, but it has to be done. Let's take a look at what's maybe not in the news, should be in the news, what's going on in the news. I'm looking at the financial markets um, and the crypto markets. It seems to have collided a bit. So here's the discussion we're going to have. How much have you lost? And looking at it, if you're invested in the crypto world, you've lost quite a bit, haven't you? There's some that made some money, but not recently. Okay, let's take a big look at some of the top hitters. And I want to first say that I don't see any going up. I don't see any going up. I see them all going down, unless they're packaged a little different way. So I'm not really looking into evaluating that. But take a look at the major one that we know, the first major crypto coin, Bitcoin. 1 month high is 43,109 and 47 cents. Yes, for one Bitcoin, 43,109.47. Do you want to know where it is today, right now? I have no idea. Here's the reason why. As I'm making these evaluations, these calculations, and yeah, I got them right here. I'm trying to make sense out of this thing. But let's take a look at Bitcoin. I got 5 here: Bitcoin, Ethereum, Solana, Litecoin, and Maker. So I'm going to review those, but I'm not trying to pick on them. They're just high-priced ones that are very highly financed and all that stuff. So let's take a look at Bitcoin. 1 month high is 43,109.47 cents. Now close to 27,601 cents. Now, I've done all this paperwork since then. So let's see what it's at right now at this very second. It may have gone up, but every once in a while I get a little message saying something's up, something's down in the crypto world. And it's been coming like crazy. It's been hitting my phone every minute. Every minute I'm getting something. Bitcoin, Dogecoin, all those. So let's see what's going on in the world right now. I'm taking a look. I go through Coinbase, but I'll tell you how I do it. It'll make it a little better. Let's see. I last quoted 27,600. Hey, it moved up. Oh, no, it didn't. It's not even further. Sorry. It changes that much. I mean, you just look at it and then all of a sudden, boom, you turn your head and go around and it's going to change. 27,141. So in the time it took me to write this up and get on YouTube and start this video, it's lost another $460. That's crazy. But what does that show me? Okay, it's lost quite a bit. So what are the numbers like? I'm going to review this number along all of the 5 that I mentioned. And I want you to take a little bit of math on this. So the month high, 43,109, it's now 27. I did the numbers at 27.6. And that had it down 35.9769%. Almost, very close, very, very close to 36% down for the high of the month. So 1 month back. Okay, well, you go back 1 month. And so April 11th, go from April 11th to May 11th and bingo, or April 12th to May 11th. You got a drop of almost 36%. But what about the year? If I go back a year and look at the high, it was $69,000. Now it's a mere 27,140 something. That translates from the 27.6. It's down 60% flat, 60%. I think it's 60.00002 or 4 or something like that. It was some crazy number. but down 60%. That's nuts. So what does that tell us? I'm going to use Bitcoin as the example, and then we're going to take it from there. What that shows me is if you had at the top, if you bought at the top, you lost 60% of your money within a month. What does that say? Well, let's get the trusty cell phone calculator and see what it means. And oh Lord, just by chance, I hit it. Okay, it's up 10 bucks. Hey, it made back $10. So just by chance, we're going to take the calculator and we're going to do a little bit of basic math. I teach this, and by the way, my name is Greg Harnett. I teach stockbrokers and insurance agents for their licensing. And I also wrote a book, The Investor Handbook, and that's how you can get a hold of me. Investor Handbook - Fire Your Stockbroker. So I teach stockbrokers and insurance agents, but I also teach individuals how to fire them. Okay, because I just teach them what the state and the federal government wants them to know. There's so much more, and the federal government gets it all screwed up anyway. What do they know? They think they know the markets. They don't know crap. On the left, on the right, down the middle, they don't know crap. They can't even regulate probably a softball game without screwing it up somehow. So looking at, okay, I said down 60%. 60% from the year. What does that tell me? That tells me I got 40%. If I got 40% of what I used to have, how much does it have to move up? Well, people will say, well, it was down 60%. It got to move up 60%. No way. Take 60% out of 100. Say you got a $100 bill. Now, give me that $100 bill, and I'm going to give you two 20s. Now, how much do you have to make back? Yeah. You got to make $60 back, or 60 from 40. So you're going to make 150% return just to break even from the high. Now, if it's just the 36% that you lost, then you only have to make back about 54%. And so take a look at your money and think about it. Can you make, people say, oh, I lost 20%. Now I got to make 20% back. How am I going to make 20%? No, you got to make 25%. Think about it. Take it based on 100. The math is much easier. You had $100, you lost 20. Now you got $80. You got to go up 20, right? But 20 of 80, which is 1/4, 25%. I told you I was right. Now, let's take a look at Ethereum. Ethereum 1 month high is 31.79 and 74 cents. I'm pretty confident in the 1 month high quotes. That's not going to change. So write those down. You can look at them. They're not going to get back up to that for a bit. Now it's 18.94 and 60 cents from when I did that. Now that had a drop of 40%, 40.42%. And for the year high was 48.67. Now it's, down 61.1%. So now 38.9% is what you got. I give you $100, right? Or you have $100, give me back $61.10. Now what's left? $38.90. You're going to have to really hustle to get your money back there. So it's even worse than that. You're going to have to make more than 150% to get your money back, just to break even from where the high was. Okay. Now, from where the low was, or where, from the 1 month high, you're still down 40.4%, meaning you got less than $60 out of the 100. Okay. Solana, once again, The 1 month high, $110.95. The 1 year high, $260.06. Now it's $44.11 from when I did it. Now, that's down 60.3% on the month high. For the year high, it's down 83%, or down to $17 of that $100 that you used to have. So for every $100, if you had it at the high, for every $100 you had at the high, you got less than $17, $16.96, something like that. Lite, LITE coin. The 1 month high, $115.17, and now $59.29. The 1 year high was $339.62. So again, we're going to hit major percentage drops in the value of your portfolio if you have Litecoin in it. Down 48.52%, almost half your money from the high, 1 month high. Down 82.54% from the year high, which gives you a net of $17.46 from the $100 if you had $100 at the high. And that's the way you should look at it. Every time I was at the high, I had $100. So for every $100 I had in my account when the market was high, bingo, I'm down to $17.46. Okay. Now, let's take a look at the next one. And this will be the last I'm going to talk about. Maker, MKR. The 1 month high, $22.84.33. Now it's at $1,015.57. The 1 year high, much greater, $53.53.49. So for the month, it's down 55.54%. So of that $100 that you had when it was at the market high for the month, just for the past 30 days, you now only have $44.46. Now, for the year, the 1 year, if you had the money at the 1 year, when that day was there and you had $100 in there, that $100 is down to $18.97. $18.97. It's ridiculous. It's really ridiculous on what's happening. You more than on the last three, Solana, Lite, and Maker, you're going to double your money. You're going to double your money on the monthly basis just to break even. On the monthly. On the annual basis, you're going to multiply them by 4, 5, 6 times. When you're under 20, how do you bring $20 to 100? You multiply it by 5. That's 500%. And some of these are down even to $17. So it's probably 600 plus. Just divide 17 into 100. That's how many times you got to multiply. And each one time that you have to multiply is 100%. Oh, excuse me. Okay, now that's the crypto side. Why are you in crypto? Cheese and rice, people. Why are you in crypto? I use crypto as an exchange unit, and then I get out. I get in and then I get out. I do that because sometimes it helps facilitate trade between people and countries and other stuff. But do I want to invest there? Oh, man, no. Everybody's going to say, yeah, but it's rock bottom now. It still can go down. Everybody's been saying that for a week. Okay, so let's not get so defensive about something offensive. Where is the backing to it? It's all relying on you. It relies on you. It doesn't rely on a country. The currency is an investment, a security, almost a security. It's being traded like And don't get the government involved in securities. They don't know what the hell that is either. You think I'm joking? Ask the SEC how long they fought the insurance companies on fixed equity index annuities and life insurance and lost. And the judge lambasted them, saying, no risk, no loss of principal. They can't lose money in those. How do you call that a security? Security is risk. Security is investment. When I'm talking securities, I'm talking a security. I'm talking something representing something of value and at risk, an investment. I'm not talking security like the mall guy who stops you for, oh, never mind. Let's get into this a little better. Let's take a look at Bitcoin now. I want to see where it is. Since we've been talking just for about, it's down another $200. Okay. I'm sorry I had to smile, but this thing keeps dropping and Bitcoin's one of the stronger ones. But people were starting to wake up, and I think everybody should. And then this sucker will go down to about $50 a coin, where it belongs. But I think, well, let's take a look at how much this could. So at the current market, 26,961. See, it's 700 less than when I quoted, so the numbers are even worse. It's still up from the beginning. Get this, 25,700%. Well, it started so crazy low at pennies. Of course, now it's thousands of thousands. Maybe $1 it started at or something. But yeah, probably started just around there. But take a look at what that means. Listen to me at least. That means it has a long way to drop still. It's nowhere near bottom. It's nowhere near it. It could drop until it finds a place that people are happy. The majority of the people are happy. That is it. Investor confidence is 100% the concern with crypto. And that's why you got celebrities pushing crypto. I think you should just fire the celebrities and not go to their movies anymore. If they're going to do stupid stuff like that and to pad their pockets, I wonder how many crypto coins they got. Yeah, how many did they get? Okay, so now let's take a look, and I just want to say hello to everyone. Hello, everyone. Got questions? Hey, I'm doing this solo, so it's almost midnight now, and I just took a look at this and wondered why my phone was buzzing like crazy. Take a look at some of my instruction videos as well on my channel. Now, they all look at crypto as a means to facilitate between people, but people are looking at it as an investment. And if you're in crypto now, you lost. Okay, unless you got in very, very early, you lost. But chuck it down as a lesson. Will it recover? Probably. Yeah, it probably will. Some. I don't know if it's going to recover all, but I think since it's across the board, all across the board, there's not, I mean, like I said, some packages are not down as much, and any cryptos tied to a currency are semi-stable, pretty stable.
According to Investopedia.
What about that? What about Investopedia? Sorry, that just came up on that. But take a look at where you're going to put your money, why, and how long you got. What's your time frame for the money? And split it up. If you have $10,000 to invest, for example, what's the time horizon for that money? Is it separate? Is it one big time horizon? Oh, I want this for retirement. That's it. That's 20 years. Okay, you got a 20-year time horizon, and that's how you should invest. But what if it's, oh, well, I want some for this and I want some for that. I may need a little bit, in a short period of time. Well, then you have different investment um, portfolios or investments that you have to invest in and set aside. Don't package everything together in one portfolio. Keep in mind also when you're dealing with investments, you also need to look at the registration of the account. That's going to be very important to how you not only protect your money, tax your money, use your money, and the time frame. Are there other benefits? Sometimes this investment themselves have the tax benefit. Sometimes you need a registration to do that. And you need to get a darn good financial advisor. If you go to my book and you read the first half dozen pages, you're going to know that I teach people how to be stockbrokers and that, but I know their ups and downs. I know their experience. I know their potential. I know their abilities. And I would say probably 95% plus don't know what they're doing. Or they're so focused on what they're doing very good at, they overlook a lot of things that you should be considering. They just sell what they're comfortable with. And that's the bottom line. They're salespeople. 95% of the people are salespeople. I don't care if they call them financial planners or investment advisor representatives, IAs, IARs, MOUSE, Mickey Mouse. I don't care. The bottom line is you got to ask questions about these people and find out. If somebody's trying to recommend crypto to you or bonds or stocks or mutual funds, how much do you have of that? Why do you recommend that to me? You don't know me from Adam. You didn't do a profile on me. You don't know my time frame. You don't know my assets. You don't know my tolerance. You don't know my aversion, risk aversion, risk tolerance. You don't know a lot about me. So you got to open up to them. If you don't open up to them, you deserve what you get. This stuff about, privacy. I don't know. Good. You can have all the privacy you want. But the bottom line is the more you tell somebody who's a professional who can help you, the better off you have a chance of improving. Now, anybody can recommend some mutual funds or money managers, and that's the way a lot of people are going. They're going into these companies that actually they get their car insurance from, or they get their home insurance, or they buy their life insurance from them, or their health insurance agent. Please, I was licensed in insurance and securities. I was a registered investment advisor, Series 66, and a Series 7 general securities stockbroker, and a Series 3 commodities broker, and life, health, property, casualty. But I like to teach. I'm 65 years old, and I want to sleep at night. But anybody who gets that investor handbook is going to get pretty much everything that they need to know that their stockbroker knows. Plus, how to trade it, how to manage a portfolio, how to select your stocks, everything. Now, that's enough on that. Let's get to the Dow Jones and the S&P 500. Now, these are large company indexes. If you want to find medium-sized companies, look into the S&P 400. It's mid-cap companies. Mid-cap meaning middle or mid-capitalization, medium capitalization, not the large companies, not small. Even a small company is, 2 to 10 billion? I think that's pretty big, or up to 2, and then micro is still 500 million. We're talking about, when we talk about capitalization, we're talking about the stock price times multiplied by the number of outstanding shares of common stock. So the Dow Jones Industrial Average, that's been taking a beating. It's not as good as the administration puts out. And if they're taking credit for it, they better take credit as of now, because I'm doing the numbers. And I'm a firm believer. One of my favorite quotes is there. I'm probably going to get this wrong, but the concept is spot on. There are three types of lies: lies, damn lies, and statistics. And I've been giving you a lot of statistics, but my statistics can be backed up. All you have to do is go right into the nearest crypto webpage and get the pricing. That's all I did. I pulled it from one of the largest crypto managed wallet companies, or however you want to call them, account where you can buy a lot of different. And I just pulled the numbers right off there. And then I used my trusty cell phone as a calculator, and I double checked. It works. Okay, so Dow Jones Industrial Average. Let's take a look at that. It's down 326.63, 1.02% yesterday. Well, today it's 11:55 p.m. my time. I'm on Mountain Time. So it's down on Wednesday 1.02. It's down to 31,834.11. Now, if we look 1 year from 1 year ago, on May 7th, that's 1 year and 4 days, whatever. I didn't pull daily, I pulled weekly, okay? And I didn't want to go over it. So May 7th, 2021, the Dow Jones was 34,777 and 76. That's down 10.88% in the past 12 months. Is the administration going to take responsibility for that? They took credit for the upswing after Trump left. Yeah. Well, they got to take credit for the drop, almost 11% in the last 12 months. Last 12 months and 4 days. Okay, 12 months and 4 days. Well, now, if you go from the very day that Joe Biden took office, let's take a look at that. 30,996.98. And where is it now? 31,834.11. Hey, it's up from when he took office, up 2.7% for almost 16 months. I did 15 months and divided that into it, 2.16. I gave him a couple weeks extra credit. If I took the 15 and a half months, then his return would be even lower. But annualized, that's 2.16% for the Dow Jones. Ridiculous, insulting, and if you ever hear him take credit for the markets, consider the source. He's nuts. I don't mean it that way. Well, maybe you do, but he's definitely wrong. And all of the people who take credit for that are wrong. So let's take a look at the S&P 500. Now, Dow Jones is made up of 30 big stocks, big companies, mega companies. These are the big boys in different industries. The S&P 500 is the top 500 companies, large companies. Currently, it's at 3935.18. It's down 65.87 today, Wednesday. That's down 1.65 in 1 day. Down 1.65%. This is what comprised of most of your mutual funds. You know, the big companies in there have high institutional investors, which are mutual funds, insurance companies, banks, other financial institutions, and pensions, and blah, blah, blah. I'll go right down the line. So let's take a look at the performance on that, the S&P 500. It is, well, for the past year, it's down 5.72%. And since inauguration, I have to say, since January 22nd, that's the date I got, it's up 2.44%. And if you annualize that for the 15 months, it's 1.95% up. Please. Why is it down 5.72? Why is the Dow Jones down 10.88 over the past 1 year? Well, it's easy. Income is not showing the way it was or how it's expected. It's always investor expectations first, and then reality comes in and adjusts it. Anybody who tells you different is running goofier than the Snake River. Okay? Bottom line. You got to look at the reality. Numbers are coming in from income, sources. Companies are declaring their income. Analysts are saying, well, we expect it here, and then all of a sudden the income comes here. Well, boom, it's going to get down there. That's where the price is going to be. Because the investors are relying on analysts. And when they're wrong and money comes in less, investor confidence goes down. Exactly what happened to the crypto. But something else hit the crypto. I'm not a major analyst on the crypto. I just see the trends and I just say, park it and then send it through and then get out. I've always had that with crypto. I can't stay into it long enough. I was into it earlier in the year for about, I'd say about a week at the longest, and made a little. Nice. Made 20, made 10%, and then got out. Is that the way you should invest? No, because it's going to be just like gambling. It is what you can do. You can be up or down so fast. And taking a look at these companies, these cryptos are down 10, 15% a day. There's been 30% swings up, down, sideways. So you got to watch that. Please. You're not going to get any confidence from me about putting money into crypto. I don't care if it's already down. I just told you that the Bitcoin went down. How much? It went down 35, almost 36% in a month. In a year, down 60%. But there's still so much further it can go. It's going to get nuts. Look at it at 27,000, where it's at now. It's still up almost 26,000% from where it started. And they're going to tout those numbers. And they're going to say, well, look at this. We're still up. That was just an adjustment. Yeah, down. Big time. Is it going to go back up like that? Not if the world is smart. But if people dump enough money into it, if you start seeing the celebrities coming out and trying to bolster it up, that's what they're there for. They're there to bolster it up for the people that are current and try to find new investors to pay off the currents. Who's going to buy the coin? It's a set number of coins. Who's going to buy the coin? New investors. Who's going to sell the coins? People who are going to take profits. Hello. Get out. They're going to see a little 2% or a 3% upswing, and they're going to get out. So be careful on that. It's the same principle in the stock market. However, at least it's backed by assets and not investors to be. Well, let's see. People get in up here. They need a lot of people down here, don't they? They need a lot of people down in the bottom part to feed those top pointy people. Did I make myself clear enough? Subtle as a broken leg, I know. Okay, so what about the markets? What about the stock markets? we've always seen that. I mean, if you go back for the longest time, let's take a look back at 1987, we had, was that Black Friday in October? You don't want to hear my story on that. I was in the hospital getting my gallbladder out. Earlier that year, I had 16 inches of my colon taken out. And I didn't put my stops or exercise my options. And I was in trouble. I lost big time. I lost most of what I made earlier in that year because of some silly, stupid things. And one of the dumbest things I've heard was when Vice President Joe Biden touted the markets right when I was in the hospital on the Friday of an options expiration date. Trading stops on Friday, the third Friday of the month. I had October options. All it had to do was make it to Sunday. But he opened up his mouth on closing business on Friday. And lo and behold, Citibank went through the roof. I wrote options on I wrote covered calls. And if it happened, if he made the notice on Monday or over the weekend, I would have been sitting pretty. I got my price. Okay. I made $1,500, but I could have made about $7,000 after what happened. He made notice of something the very day, the last trading day of options in that month. They were about to expire. I would have not had any problem. I would have owned all the stock and I've been kept the premium. Keep the premium anyway for writing an option, but over a certain dollar amount, I didn't make any money on that. That was the buyer of my option. And it was flatlining. It was flatlining until Joe Biden opened up his mouth. And lo and behold, the stock goes up 20%. I don't know. People just don't think. And he certainly didn't. You don't influence the markets like that on the last day of option trading for that month. That was incompetence. And that was ridiculous. I know he screwed a lot of people up. I know he made a lot of people nice and happy, but it was not natural for the markets. So what is natural about the markets? Oh, it's very simple. They go up, they go down. They go up, they go down. I grew up 5 blocks maybe, from an amusement park in Pittsburgh. And I used to ride the roller coasters all the time, and that's exactly what the stock market does. Take a look at 1987. As I said, in October, we had Black Friday. And the markets took a dive, but they recovered pretty well. Took a bit, but they recovered. And what happened in 2000? Markets took a dive again, but they recovered pretty well. 2020, so 2008, so it was 1987, October. It was 2000, 2008, 2020. Since 87, 4 major drops, adjustments, and everybody's going around screaming, crash, market crash. I like that for one reason. You know who not to listen to. If they're calling it a crash, they're just flat out ignorant, flat out dumb as a rock. You know, smile, shake your head, and walk away. Don't listen. Okay? Do it. If you're listening to them, you deserve to lose your money. Okay? Maybe you'd like to buy a bridge in Brooklyn. You know, talk to me. Better yet, go buy my book. Okay, so what's happening in the markets is not uncommon. In fact, I like it. It has to. It's just like the real estate market. And it's going to adjust up and down and stupid. Right now, the real estate market is horrible. I know I'm trying to get a new place. I mean, you can see boxes, we're going to be moving soon. Can't afford this place. Heck with it. I rent. I'm sorry, but I rent. I don't know where I'm going to be in the next few years because I'm probably looking to save up a little, get a nice house, small house, retire, not move again. Okay. Or we'll go to my wife's country and see how that happens. But anyway, look at the markets. The stocks are going to go up and down and sideways. But when you go into the markets, look at the company. Don't look down at the big picture. Anybody who tells you that, get the heck out of the way. You need to look into the company. Look into it. Do a micro, not a macro look at the markets. Find the companies that you want. Find the industries you want to be in. Find the companies that are leading the industry. Don't go to the top one all the time. He's up there for a reason. But how much can he grow? You need to find some company that has plenty of room on the top to grow and not so much to lose on the bottom. And it's not as difficult as it seems. So first you want to find out a PE ratio, price earnings ratio. What is the price earnings? Well, you take the stock price and you divide it by the earnings. PE ratio, PE, earnings per share. If it doesn't have a PE, go to the newspaper, open up go to the Wall Street or something. Go to your newspaper that has the stocks reported and look at it and go down the columns and all the symbols and get on the computer and then take a look at the PE on the top part somewhere. It's going to say PE. It's going to list the companies in PE. If it doesn't have a PE, go over to the side. Okay, if it's a right or a warrant or a preferred stock, it's not going to have a PE ratio. But if it's a common stock, it's not going to have any special designation next to it. For example, WMT, Walmart, or F, Ford. Look at those. If you see Ford and you go across and it has a PE ratio, what does that tell you? The previous 12 months, it made money. It had income. If a stock doesn't have a PE ratio, it didn't have earnings for the last 12 months. Bye-bye. I mean, bye-bye. Take a look at dividends. Do you want a company that has dividends? Great. Now's a good time to buy? I don't know. Why don't you wait a little bit? Let the stocks go down. Do the math. Do the math. If a stock is selling at $10 and it's paying $1 dividend, that's 10%. Let's say it's only paying 50 cents. That's 5% a year. That's not bad. Plus possible little growth. Now, what if the market's taking it down? Oh my gosh, look at my stock. Look at the stock. I was just about to get into that. And now it's dropping like a rock. Well, it's still paying a dividend. Does it have a PE ratio? Is it still making money? What's the problem? Huh? It's dropping? Yeah, get over it. Investor confidence could have dropped that. Go into the news. Go into the company. Find out why it dropped. If you can't find a reason, it's probably investor confidence, like everything else in the industry or everything in the market's going down. Great. Yeah, great. Because that $10 stock may go down to $5. Well, what's so good about that? Well, if it's paying the same 50 cents, that $5 investment now pays you 10% for the rest of your life, for as long as they're paying a dividend. Is it a strong company? Is it a good company? You think I'm kidding? There were some very, very strong companies like Alcoa, and that was down to about $6 a share in one of the markets drops. I think that was year 2000. Ridiculous. It was very popular. We know Alcoa as Reynolds Wrap Aluminum. It's the aluminum company of America. I'm not trying to tout Cool. I haven't looked at it for a long time, but you look for dividends. You look for stock companies for growth. Some look for dividends, for regular income, and some look for both. A little bit of growth, a little bit of dividend. Hey, rock and roll. But the bottom line is you're going to look at the companies, small, medium, large, whatever the size you're looking at. And you got to properly do it. I'm not here to tout any one company. I threw out a couple because they're household names pretty much. But take a look at your Bitcoin. Take a look at the Dow Jones and the S&P 500. Now, if you are into medium-sized companies, then you're going to want, as I said, the S&P 400 medium-sized companies. Now let's take a look at the bond market. Whew, what a mess. I got to ask you, why are you considering the bond market if you are? First of all, let's take a look at what the bond market does. It raises capital for governments and companies. Loans. Bond, loan. Okay, let's take a look. Let's count them off. Bond, loan, bank, debt. They're all four-letter words, aren't they? Coincidence? I don't think so. But let's take a look at it. So you go into a bank and you go to the bank manager and you say, Mr. Banker, I want to take out a loan. He says, oh, great. I got the application right here. Now, what can I do for you? He says, and you say, I need $100,000. Oh, wow, good. And what's your income? Well, I have this income and this income. Oh, okay, good. Now, what type of a loan? Oh, I want it to be an unsecured loan or secured by my assets, if you want to do it that way. And he says, oh, what assets? Or what? Here's the thing, bankers don't take loans on assets. I'm going to tell you a really quick story, and I'll get back to this scenario. It's very relevant. I was in college, and I needed a computer. And at the time, I was collecting coins, and I had a lot of gold coins, 1 ounce gold coins, bullion coins, US, as well as the UK and Austria. And I had probably about 25 1 ounce coins. But back then, it was only like $300 an ounce, $290 an ounce. Now it's crazy. I walked into the bank with 10 1 ounce gold coins and asked for a $1,500 loan and use that as collateral. You can put that in a box and there you go. And you keep a key, I keep a key, or whatever you want to do. You just sign for these and just keep them for me or on deposit if you want. And they said, well, we can't do that. I'm like, why not? It's a guaranteed loan. No, that's not how we do business. Okay, I'm going to take an application. Yes, and for that amount that you need, we have to do it through our banking card. Bank card. I just want a loan to buy a computer now. How long is this going to take? Well, this is going to take 2 months or 2 weeks. 2 weeks to get the card and to be able, yeah, probably. Well, we can make it maybe 10 days or a week, but I like to tell people 2 weeks. I'm like, no, thank you. And I walked out, and I never dealt with a bank other than a checking account from then on. So let's get back to loans, bonds. We're back at the banker, and you tell him $100,000, and $100,000, he's starting to write the loan application up, and he goes, now, how did you want to set that up? And I'm like, oh, that's a good question. Here's what I'd like to do. Mr. Banker, I want a $100,000 loan from you, a check from $100,000, or you can transfer it into my account. I have an account here. And I want to pay interest to you. And I'll pay monthly if you want, but interest only. And then 20 years from now, I'll give you your money back, the $100,000. And right at that time, he probably reaches underneath the desk and hits a button and gets the police or the security guard with a shotgun. That's exactly what a bond is, though. All these companies, all these governments do the same thing. All you get is interest. You're giving them a loan. You can whine and crap and be all you want. But the bottom line is about governments and about big corporations. But if you're in a bond market, you're funding them. You're giving them a loan, debt. You're a creditor. You're a creditor to the U.S. government if you buy U.S. treasuries. You're also a little cookie puts, if you know what I mean, for doing it. So wake up, people. Be careful. And keep this in mind about bonds and interest rates. Every time you hear interest rates going up, if you got bonds, the price of your bond just went down. They go in opposite directions. Here's the theory. It's not theory, it's fact. If you got let's say you got a 5% bond, and then they raise the interest rates to 6%. You got a bond, and most bonds are $1,000 bonds, face value. You buy the bond, and most investors don't just buy one bond, they buy like 50 or 100 at a time if they're in the bond market. And plus, so your $1,000 bond is a 5% bond. But now interest rates are up, and companies and governments are now issuing at 6%. Well, the companies are, the governments aren't. They think they're omnipotent and they are safe. Fools. But they're issuing these bonds at 6%. You got a 5% bond. Right now, your bond is probably worth $900. Now, the closer it gets to the time it matures, it'll get closer to the 1,000, because when it matures 10, 20, 30 years from now, they got to give you back the $1,000. Jeez. Talk about inflation and loss of power, purchasing power. Ridiculous. Bonds have their place, but I haven't found them yet. I know they're good for volatility in a portfolio. However, you can get the same volatility control with preferred stock instead of bonds. If you're a common stock investor, you're subject to a lot of volatility up and down, but people will put income securities. So why don't you get a REIT, or real estate investment trust? Why don't you get a preferred stock, something that pays dividend or interest, if it's, however you want to call it. But stay away from the bond market. And here's the thing, a lot of people back in 2000 saw treasuries listed at 22%. They didn't pay 22%. People were throwing their money at the treasuries like crazy, getting out of the other bonds and getting out of the stocks and pushing up the prices just on a demand, supply and demand. Interest rates didn't do a thing to do that. And did the federal government pay 22% or 20%? No, they didn't. They still paid the stupid 1%, 2%, 3% at the most. The rest was just the price going up. So if you bought when the price was going up and up and up, there's no way you had a chance to win. You probably sold and lost probably 10, 15%. So be careful with the bond market. It is not the safe markets that they say they are. And I want to wish you well. Now, you could always check us out, or check me out. The site that I got, www.65exam.com. You'll be able to see the different courses that I teach and the investor handbook and other stuff, and be able to send me notice that you wanted to get it. I don't have a big store or anything, so But nobody's going to help you like that. That book is gold. What's going to happen after you read that is you're going to pray for the next market drop, market adjustment. You're going to love it. You're going to make money going down. You're going to make money going back up. You're going to make money when it's doing nothing. You're going to make money when the markets are going up too. That's what a broker can do. But they don't know it. Most of them. And if you're looking out for, I got a couple minutes. So if you're looking for an advisor, a broker, give them a test. Test them. Tell them that you got a portfolio and you're concerned about the stocks and that going down. How would you protect it? How would you help that? And then sometimes tell them sometimes nothing happens. The market's just flatlined for 3 months, 6 months, 12 months, more. My stocks sometimes don't do anything, and then they do fine after a bit. So what do you do? And if he doesn't come back with something on options or something like that, walk away. And then ask him a question. Now, I heard about investing in options. What do you think? And if he comes back with, or he or she comes back with, oh, too risky for you, you don't want to get into that. No, that's why I'm here to protect you from that. He doesn't know what the hell he's talking about. Guaranteed. There's 3 ways to make money, 3 strategies in options: income, hedge, and speculation. And speculation is the one that people know, and that's it. That's all they think options will do. You know, you're with the wrong person. Anyway, I wish you well. Contact me at financeguy57 at Gmail. financeguy57 at gmail.com. And good luck to you. Good luck on it. Any other comments, anything you'd like to hear about, let me know. Happy to answer. Now, I'm not going to pick your stocks. Don't say, well, I got this and I want to do that. I teach people how to manage their portfolios better. I put them in a course, and at the end, we basically utilize their assets to build a portfolio for them, and then that's it. Then they're on their own. I mean, you should know exactly what to do, but we talk about that. So take your time, get back to me. Take a look at the markets before you react. Take a look at the individual things that you're looking at. Don't jump into something because somebody on TV tells you to. I don't care if it's the president. I don't care if it's the Speaker of the House. I don't care if it's the people on the right, the left, or the middle. You do your homework. You look at investments the way they should be. And good luck.